Stefan Isaacs, you're fund manager at M&G Investments. What about the life as a bond fund manager in a year where everybody says go into equities?
They may well be right. I guess we don't have a crystal ball, but my view is that there's still a place for income in an investor's portfolio in a world where central banks will remain very accommodative, where demographics, especially in Europe, still remain very challenging. And as such, I think that, as I say, credit still holds a place in an investor's portfolio, and I think will, at least in relative terms, do reasonably well in 2014.
Where do you see the biggest opportunities in the bond market?
I see the biggest opportunities in the financial space. We think that there's a very strong alignment between the banks and creditors. We're probably only halfway through the deleveraging process. We've seen 3 trillion euros of deleveraging within the Eurozone banking system, and we probably have another 3 trillion to go. It's a very similar situation to the one we saw in Japan. That ultimately should be a positive for corporate bonds in that space, as the market starts to accept that banks become more utility-like in nature. That might take some time, but that will allow the market to re-rate those bonds, and as a consequence, I believe in the medium term they'll look very attractive.
In 2013, there was a big demand for high-yield bonds. Is there still room for high prices in 2014?
The challenge for high yield is obviously, as you say, it's had a very good run. We still think that the argument, again, in relative terms, stacks up very well. So my expectations would be for mid-single-digit returns for global high yield in 2014, which I think will look good versus many other asset classes, not least against cash and government bonds. However, you're right that spreads having come in a long way and now trading through their long-run averages probably can't trade significantly tighter. So most of the returns in 2014 will be about income and the coupon that is paid to investors.